before we start this question, just know that you can find a link to it in the description below. This is another bank reconciliation question which includes having to do an opening reconciliation. Now the difference between this question and the one we did before is that the expenses we have in our cash book, you will see that there are no check numbers associated with them. So where I told you in the other video how it would be easy to identify amounts to use in your opening reconciliation by looking at the check numbers, this is not the case. So we have to apply another method in determining that. The same thing for deposits. So what we're going to do is walk through this question pretty quickly and see what that looks like. Now, because this question is not as long as the other one, what I will do is complete the checking off of the bank statement information against the cash book and completing the open reconciliation in this video, and we'll have a second video which will include updating the cash book and completing the month-end reconciliation. All right, let's get started. Open my tools. All right. So this is the information for D. Reynolds, and we have the cash book and the bank statement below, and we're being asked to prepare the bank reconciliation at March 1st, 2018. So that's our opening reconciliation there. Prepare the updated cash book and prepare the bank reconciliation at March 31st, 2018. So that's our month-end reconciliation. Now, note that in this particular question, the cash book is incomplete. Why is it incomplete? You are unable to see the balance in the cash book. So there was no balancing of this. So we first have to determine what the balance is supposed to be, and to do that we need to figure out which side our balance carried down will be on. So let's do that quickly. So we're going to total everything on our debit side first, then go over to the credit side and do the same. Then we see what the difference is and where we put that balance carried down. Let's bring up the calculator. $2,166.85 is the total on our debit side. Let's write that above here. 2,166.85. So let's see what's the total on our credit side. We have on our credit side a total of 1,736.14. So our credit side is less, so that means our balance in figure has to go on the credit side of this T account. Balance carried down. So let's see what that difference is. 2,166.85 from that amount. So that is 430.71. Right. So always make sure that your your cash book is balanced before you start your question. 2,166.85. Alright, so we're good there. Now, let's take a quick look at the beginning balances in our cash book and compare it to what we have on the bank statement. So we have $125.35 on the debit side and $237.40 as a credit balance in the banking on the bank statement, sorry. So because this differs, we have to complete that opening reconciliation. Let's go through our bank statement details and check it against the cash book. We will highlight anything we think may be required to complete the calculation for the opening rec. We will cross off anything we find on the bank statement that we also find in the cash book, and we will circle anything we see on the bank statement that is not in our cash book. Okay, so let's get started. We have Across 72.40. So this is a check paid to Across for 72.40. So is that on our credit side? No, we do not see 72.40. Now this is a case where the checks that you currently see in the cash book is what was written for that month. So if we had a check that cleared in the same month on the bank statement, it is safe to assume that this check was written before. So this check could have been written the prior month or other months. We have up to 6 months, right? So it could have been written anytime before March. So because this is not in our listed as one of the checks in our current cash book, we will assume that this is an unpresented check for the prior period, and so include it in our opening reconciliation. Keep in mind that the opening reconciliation is basically the month-end reconciliation for the prior month, which would be February. So this would have been an unpresented check for February if we were completing a month-end reconciliation in February. All right, I hope that made sense. So moving on, we have P. Ross, who paid us $226.40. We see that in our cash books, so we can cross those two off. We have rent for $250. We paid rent for $250. We have that in the cash book. Then we have R. O'Neill, a check paid for $39.65. Again, this is not in our cash book, but it was a check that was written before, so we can assume that this can be part of our opening reconciliation calculation, so we highlight that. Now we have interest income, because it's on the credit side of the bank statement, of $195.26. This interest income is not in the cash book, so we can circle that as one of the items to be included in our updated cash book. Deposits for $700.20, is that in our cash book on the debit side? We don't see 720, but before you make any assumptions, you always check to see if you have any merged deposits. So this was deposited on the 15th, so we can check any income transactions up to the 15th. So I see it's 720, so let's add this 142 here, the 95.60 and 462.60 to see what we get. 142 560 plus 462.60, and we do get our 720, so we can check those off because we found them in our cash book. We have on the 15th there was drawings of $300. We have it here in our cash book, so we can check that off. Then a payment to Telco for $175.32. We do have that in our cash book. So that's a check payment to Telco. There's a standing order for $149.55. We don't see any standing order in our cash book, so let's check. Let's circle that. Sorry, this will be part of our updated cash book calculation. So we circle that. Credit transfer on the 22nd for $222.55. We do not see this in our cash book above here, so we can circle this as well. Commissions for $622.50. We do see that in our cash book, so we can cross those two off. Then we have wages for $650. We have that here on our credit side of the cash book, so we can cross that off. And finally, the bank charges for $34.65, that is not on the credit side of our cash book, so we will circle that. So good. Now we have all the information we need and can clearly see what we are going to use in our opening rec, our updated cash book, and our month-end reconciliation. So let me repeat this one more time. What I have highlighted in yellow is going to be used in our opening reconciliation. What I have circled, and this is on the bank statement, what I have circled on the bank statement is going to be included in our updated cash book calculation, and anything unselected in our cash book will be used in our month-end reconciliation. Okay, so we must remember that these type of reports need to be titled. So this would be D. Reynolds, and we will call it opening reconciliation as at March 1st, since we are trying to reconcile the beginning balances to make sure that the one in the cash book matches the one on the bank statement. This is March 1st, 2018. So we will start off with our balance per cash book. Remember, we always use that balance brought down figure, okay? That tells us, the balance brought down tells us if we start off with a negative number or a positive number. So the balance brought down on March 1st was 125.35. So we start there, 125.35. Now we're going to add those unpresented checks that we identified. Add unpresented. And these were 72.40 plus 39.65. Now I'm writing this here because you need to be able to put your working when you're doing these calculations. You can either list them out or you can do it like the way I did it. The choice is yours, but you need to show working. 72.40 plus 39.65. Okay. If we add those two, what will we get? 237.40. So let's double check the beginning balance on our bank statement, because we have no unrecorded deposit, so we can check that quickly. So yes, it is 237.40 on the credit side, so we know that our opening reconciliation is correct. Now I'm going to point out here again that we have no unrecorded deposits for our opening reconciliation, but in case you get a question that does include this, the same logic applies. If you come across an income transaction on your bank statement that is not in the current cash book that you're working on, and it's usually very early in the month, it's highly likely that that is an amount that needs to be included in your opening reconciliation calculation. So just keep that in mind. This question didn't have any, but in case you do come across a question where you have income again on your bank statement occurring very early in the month, more than likely that should be used in your opening reconciliation. So in a case like that, you would just deduct any unrecorded deposits, because that would have been unrecorded deposits for the prior month. I'm just writing it here just for your just for the sake of this video, so you would know where to put it. But yeah, that's what we would do. We would put it right here and deduct it from whatever we have above unrecorded deposits. In this case, we don't have anything to deduct, so we can put 0 there. And then our balance per bank statement at March 18th would be $237.40. Right, pretty straightforward. Right, so I'll end this video here and we will continue with the updated cash book and reconciliation in the next video.